You're listening to the Decentralized Talk Podcast, your crypto connection.
Decentralized Talk. Decentralized Talk.
All right, guys. Welcome to another outstanding episode of the Decentralized Talk Podcast. This is our 10th weekly show now in production, and we got a great one in store for you today. The Bitcoin dude abides, and he really ties the show together. We got notable picks like Decentraland, Electrify Asia, and Energo with our 3-on-3 fast break, and we deep dive and do a coin review onto the Internet of Things with IOTA. As always, guys, we're going to follow up on who's winning the 2018 Coin of the Week Challenge and how our best crypto guesses are panning out. Decent. Listen up. This is not investing advice. This is just our opinions. So please do your own research when investing in cryptocurrencies. All righty, guys. The dude abides. We want to thank @BitcoinDude for taking the time to hang out with us today. We're keeping it casual, and aggression will not stand, man. So some of the biggest influencers on crypto Twitter have alter egos, and the dude is obviously no exception. So first kind of question we want to ask you right off the bat is how did you get into crypto, and kind of what led you to identifying with El Duderino?
How did I get into crypto? I seen it on the news back in the right around 2014, right before we spiked. I said, well, this isn't going to, I didn't think it was going to go anywhere. I said, the government's not going to allow this. These guys are nuts. I mean, this is a great idea, but I just don't see it happening. And then it was, I call it like the first real media spike. It was like right around the end of 2013. All of a sudden the price skyrocketed up to, I think it was about $1,000, $1,200 or something like that. And all of a sudden the media, it was 1175 is what I'm looking at my chart. All of a sudden the media just started going nuts about Bitcoin, and they were talking about it on the news and everything like that. And I had, at the same time, I was kind of, I was working a part-time job. I was starting a web design business of my own, and I was looking for alternative form of payments. And I kept on coming across Bitcoin ads. Everywhere I'd look, I would find Bitcoin on the internet. And it was just like, looking for Visa and MasterCard processors and stuff like that. So I said, all right, maybe I need to look into this a little bit more. And then I started researching a little bit more, reading more about it. And I actually fell in love with not only the idea of cryptocurrency in general, but the ideology of the people behind it. A lot of the libertarian mindset, a lot of the anarchist mindset, a lot of the different the ways people are just thinking about money and about financial freedom. And that was when I kind of really got hooked. That's when, everyone has that moment where it's like, that's all they can talk about is cryptocurrency. It's like, oh my God, Bitcoin this and Bitcoin that and crypto this. And, that's kind of where it hit me. And that's really how I got involved in it. I was looking for another form of payment, and I came across Bitcoin, and I fell in love with the ideology, and just kind of, that's where I'm at now still. I mean, it's, that was 4 years ago, and it's been a long journey since.
That's pretty badass that you could see that in the future, because I think a large swath of cryptocurrency, everybody kind of got in, I say everybody, a large group of people got in kind of some point in 2017, right? That's when it started to really, really take hold. So to be able to have that kind of foresight and just to see from these ads and take the leap to actually get involved and start a wallet. And I know, so earlier you were talking about use the Linux system. So you must be pretty technical from the jump, I imagine.
Not super technical. I mean, I'm a bit of a tech geek, I guess. It's, I like my technology. I like my open source software. I love Linux. I've been playing around the internet since the mid '90s. So I'm a bit of a nerd when it comes to technology.
Yeah, I've got a Mac and an iPhone, so I'm. if it's not something that you could do from like a McDonald's window, I can't do it. I'm into Bitcoin again. I'm into Bitcoin for the ideology. I'm into Bitcoin for sticking it to the man. I'm into Bitcoin for the future and where it's taking us, not because of any kind of technical skill.
Yeah, and that's something that I see a lot. There's a similarity between the people that were in short term for quick profits and the people that have really bought into the whole philosophy behind cryptocurrencies and financial freedom. I think really when you dig into this and learn about it and you learn how it could really change finances in the future, that's when you'll just obsess about it. At least that's how it kind of went for all of us too. It's like really once we learned the ideology behind this whole cryptocurrency thing, that's all we could talk about. And that's kind of how we got started on the podcast. We were like, look, we're just annoying each other every day by talking about Bitcoin. Right. We should probably stick a mic in front of our face.
Right.
And you've almost got the third group that's in it for the technology side of it too.
True.
Or all three.
Yeah.
Yeah, or a little bit of everything. So I'm looking at the markets right now, and they look beautiful. I mean, in terms of 24-hour change, right? So, I mean, over the course of the last 72 hours, it doesn't look good at all. But over the course of the last 24 hours, everything's back in the green right now. But we've all been watching this so just for reference for anybody watching the show right now, we're recording this Sunday the 18th, it's about 7:30 Central Time. So for the last 3 days, we've been having to walk people off the ledge. So we're trying to figure out just what does the dude have to say about. I'm still calling it a crash because I think we're still in it. What is the dude's thoughts on why we're in this situation?
I mean, the price is obviously, I guess when it goes from 20,000 to 8,000 over a 2-month period, I guess you can kind of call it a crash. I mean, it's pretty dramatic. And, like we were saying earlier, I feel really bad for the people that got in at, between $15,000 and $20,000 and, watching it go down to 8 here. I think what we witnessed was, I mean, back at 20,000, I was fortunate enough, I took a little bit of profit at 20,000. We went down to 15,000, I took a little more profit. I had a set amount of Bitcoin that I kind of put aside that I said to myself, I said, all right, no matter what happens, I'm going to keep this, and I'm expecting this to go down to, my worst case scenario at the time was 10,000. And when we fell below 10,000, I kind of really, like a lot of people were probably like, oh my God, I can't believe this is happening. But once I get a game plan, I kind of stick with it. I remember selling a bunch at around 5,000, I think, in like, I don't know, it's probably around November, December. Then we went up to 8, and then we just kind of skyrocketed from, what is it, like November 22nd till December 15th.
Oh, yeah. It went crazy.
Yeah, it was the Christmas they kept giving. Yeah.
I mean, to think that's not going to correct from, literally doubling in a couple months' time. And it's literally done just that. I mean, it's come right back to where we were back in that 2 months' time that it went up.
Exactly.
So,
yep.
I think we've seen a correction. I think we've seen the scaling debate ran its course. That kind of shook a lot of people. The high transaction fees. I mean, it was the perfect storm of FUD and everything. The correction, the FUD. The SEC going after these ICOs and everything like that, kind of shaking confidence of people. The China FUD, the Korea FUD. I mean, this was all in a matter of right around the same time. I mean, you really couldn't ask for more. And it's just, are we at the bottom now? I don't know. You see a lot of people predicting 5,000. I mean, I look at my charts. I see support around 5,000. I mean, if we keep going lower, we could end up in the 5,000 range. I mean, I really don't know. And I think anyone that tells you differently is.
Yeah, nobody knows. I mean,
do you think the green we're seeing today is a bull trap?
It's certainly looking like a nice run right now. I mean, would I call it a bull trap? I'm cautious. I mean, let's just leave it at that. I mean, I'm really cautious right now.
Mm-hmm.
I'm not really buying a lot of stuff. I'm not really selling a lot of stuff. The stuff I am buying is stuff where I'm seeing bottoms. Would I run in and buy right now? Absolutely not. I mean, that's just me. It's not advice. I'm not a financial advisor. I'm just.
Yeah, no, of course. Yeah, exactly. Yeah. Yes. So hey, so what are you buying right now?
Oh, what am I buying right now? I am buying. I like Ignis right now, which is a child chain of Ardor from like the whole Next project.
Mm-hmm.
What else have I been buying? I haven't been buying a lot.
Yeah, well, I think so. If you bought if you bought in originally and you've been watching this market do its thing, and you bought in any time basically before, like we were talking about November,
Right.
There's some little tasty spots in here where you see these big drops, and then you want to come in there and pick some stuff up. But there's not a lot of incentive to buy if you've been in long enough. There's not a lot of incentive to buy for a lot of the time out there. I mean, it's just not. There's no point in buying because it's artificially up, just like you said.
Yeah, what I've been looking at basically is anything that I've seen that's back down below what I sold at is kind of what I'm buying back. A lot of people aren't going to like my picks. XRP, I sold XRP at $3. I'm starting to buy back my position now.
There you go.
Lime, I've been buying a lot of those.
Nice.
Cyber Miles, I started buying some Cyber Miles.
Yeah, I read about Cyber Miles. That is an interesting one there.
Yeah, it's definitely looks like some interesting tech. There's a lot of that stuff right now with the whole crypto marketplace, I guess you could call them.
Yeah. So are you buying mainly? So when you look at a coin to buy, are you buying mainly on TA kind of stuff, or are you buying? You're looking at the like long-term viability. Yeah, exactly. Are you looking at like all the chief marketing officers that came down from Neo or whatever?
I really don't buy into a lot of the hype. In my experience, I mean, it's been the more hype the coin is, the more it falls. I mean, that's just been my experience. A lot of the coins I like are a lot of the older projects right now. For me, it's a lot of these newer projects. I want these coins to prove themselves to me. Are they going to be around a year from now? Is the dev going to just walk off the project? Is there going to be all of a sudden a mass dump of coins into the market? I mean, it's just.
Mm-hmm.
Once the coins are for a little bit, I'll kind of step in.
That's the thing with a lot of these new coins is speculation is one thing, but when you're talking about, let's see, what is it, MadeSafe coin? I think they said they're another 10 years out from a working product. I mean, talk about speculation. That's a whole another level of speculation right there.
Yeah, that to me is too convenient. You know what I mean? It just seems like, listen, invest now, but it's going to be super great like 10 years from now. I don't
believe us.
Yeah,
trust us.
Trust us.
There's a lot of projects right now too without a working product. It's definitely important to look at these guys and see what they're doing and see what the development stages are and where it's headed. Because just like you said, 10 years is a ridiculously long time to live. Especially
Note try.
How often does anything technological stick around?
Exactly.
Really?
By the time, exactly. By the time they have a working product, there'll be something out there that's 10 times better.
Sure, absolutely.
So what do you see long term? Do you see a consolidation of the arc of the alts? Like, are they going to go away? Like, in other words, they're going to be basically found out to be scams and then go away on their own? Or do you think that because one thing we haven't seen yet in the market, which I'm waiting for, is the alts buying alts. So some of these alts that blew up and made tens of millions of dollars. Now, are they going to buy some of these other smaller coins that they think that have a kind of a cool idea? And I know this is kind of, this is just a general idea question, but I mean, what are your thoughts on the future of the altcoin market? Because obviously the issue with it is it's just way too congested and convoluted right now.
I think alts are here to stay. I think there's more than enough room for everybody. I think you're going to see a lot of specialized tokens. I think you're going to see a lot of these token platforms do well. This is based on my theory of mass adoption. Once we see crypto just get adopted where it's, a normal everyday thing, is just like using email.
Amen.
You're going to see token platforms do really well because you'll have places like Pizza Hut and Burger King and stuff like that, maybe issuing tokens like that. I think you're going to have different types of coins for different types of platforms. Just like we're talking about storage and stuff like that with MadeSafe and SiaCoin and
So have you heard of opioid coin?
what is it?
It's called opioid coin.
No.
So it's not what you think it is. It's actually it's probably the opposite of what most people think. And it's like the coin is designed. It's a really clever idea. It's like if you want to give money to somebody who has an opioid addiction for them to go get treatment. The last thing you want to do is give them cash, right? Or you want to give them a credit card or something like that, because the odds are, what are they going to do with it? Probably going to go
Absolutely.
buy more shit.
That's where you're going with this.
Right. So it's a really, really smart idea. They're going to take this coin and you buy opioid coin, and then it acts as a means of exchange for that person's treatment, and then these treatment centers will accept it, and that's kind of the long-term plan for this. But the I think the fundamental flaw that I kind of found with it is that if I can toot my own horn, right? Or whatever. So the fundamental flaw that I find with coins like that is that if somebody is hedging the exchange, or somebody's using that coin as you're like strictly reading the technical analysis on the coin, or you're making an investment based on the your growth projections of the coin, then you could fuck somebody. Like somebody could buy a coin in good faith to try to help somebody, and then now it's on an exchange. So this is kind of a long way to ask the question: do you think all the alts are going to be on exchanges, or and again, these questions are kind of out in there, but it's just general thought.
At this point, they kind of have to be. All we can really do is speculate on the future. We really don't know,
right,
how the SEC is going to react to this. We don't know how we don't know how the government's going to react. Period. I mean, they've been really cool so far for the most part. Like back in 2013, I said to myself, the government's never going to allow this. I wish I would have got into Bitcoin back then. I mean. Jamie Dimon said it, and I hate to cringe and say the same thing he said, but it's the government's. I really didn't think the government would allow this. Now we're to a point where will there be exchanges in a few years? Will we need exchanges? I guess that's another thing that we have to ask ourselves. Everyone is using it. Will there really be a need for an exchange?
Yeah.
But all you can really do is speculate on the future of the industry.
Yep.
Along with the coins, I guess.
Yeah, and I think governments don't necessarily like this because they lose control when the control is in the end user's hands. But I think at this point, it's gotten so much media attention lately, and it's kind of grown so big lately that the government can't do anything to stop it. But I think what we're seeing is a lot of companies out there are doing their best to protect people with their investments of getting scammy ICOs. I mean, we see it with Facebook, Google now, Twitter today announced something that they're going to stop, that they're going to ban crypto ads. So I think we see around the country kind of stepping in and trying their best to help investors. But I think as far as government goes, they're going to regulate it, obviously. But they can't necessarily stop it,
I don't think they'll be able to stop it either, but I think regulation is coming. I think it's to think otherwise. I just can't see it going any other way.
Exactly. No, it's too crazy out there. It's really too crazy.
I don't want them to. Yeah, exactly. I don't want them to, but it's the Wild West. And I mean, we've been getting along fine, just the way things are. But with all these new people coming in now, there's going to be a lot of people BitConnect is a perfect example.
Oh, poor BitConnect
so many people warned. It's a Ponzi scheme.
Mm-hmm.
Stay away from it. And so many people would argue about it on the Twitter and say,
wait, what happened to BitConnect?
It's like, all
right. You mean I got to take all my shit out of BitConnect?
I thought it was
shit. Hold on. I'll be right back.
Yeah, no, people got screwed on BitConnect. I mean, I don't know. For me, it seemed like you do your due diligence and you do a little research on something like BitConnect. You can see right away that it's definitely a Ponzi scheme. But the problem is there's a lot of people out there that they don't do that research, and they're just going to throw their money in hoping to make a quick buck, and they're going to get screwed in the end. And so, government's going to step in, other companies are going to step in to protect people from doing that. which, I mean, that's up for debate too. Should they protect us? Should they not? Should our own investments and money be in our own hands, or should we rely on the government to protect us? That's a whole another debate right there. But regulation is inevitable, and it's not necessarily a bad thing.
I don't know, man. I think regulation in some ways, I mean, there could be some good aspects of it. The exchanges, for one thing, I mean, protecting, having some kind of backup. I mean, regulation could have its plus sizes, but I really think that for the most part, we've got along this far without them, and it's, it might cause more problems than it's worth. Hopefully, that's not the case. Talking about bringing in strictly accredited investors and stuff like this.
Yeah,
I mean, crypto's for everyone, man. And this group of people can invest, and this group of people can't. I mean, I started with nothing and built from literally from pennies, and to take that opportunity away from someone to protect them, I think is a terrible thing.
Exactly. And yeah, quote unquote, protect them. Exactly. And I think one good thing about the crypto space is that you can make these small time investments. Somebody that wants to get into stock markets and they don't have time to do the research to figure out which penny stock is going to blow up. They can just buy Bitcoin, and they can buy a little portion of Bitcoin. If they have $10 to invest, they can invest $10. The stock market can't really do that. So it's open to these, kind of people with not as much money to throw in, but they can still invest in their future. And so to quote unquote protect people from that, I can see the benefits of regulation, but I think anybody that's in cryptocurrencies based on the ideology, I think none of us like government being involved. I think we can all agree on that.
Yeah, it could cause a lot of headaches for a lot of people. And then I don't really so much worry about regulation. My biggest thing is over-regulation. I mean, when the regulators come and then all of a sudden there's over-regulation, next thing you know, you can't even blow your nose without breaking a law.
Yeah, right. And it's guaranteed. The over-regulation is guaranteed.
Absolutely.
If there's any regulation, people will take advantage of it to the death. Hey, also, do us a favor. So tell everybody. So I know you have a website, and I know you have your Twitter page. Give everybody a little rundown of things that you're doing on the site and where people can reach out to you if they want to reach out to you.
What am I doing right now? I got BitcoinDude.com, which is spelled dude with D-O-O-D, not to confuse with the other dude. And I got at BitcoinDude on Twitter, and the Bitcoin Dude on Steemit.
The Bitcoin Dude on Steemit, guys, check him out. Go visit the page. Go give the man a little steam.
Thank you, sir.
Well, look, dude, I appreciate you coming on. I appreciate the conversation. We'd love to have you back on the show anytime that you got a free moment. I know you're busy out there. We see you out there tweeting every day.
Tweet storm.
Tweet storm. We're trying to get on your level.
Yeah, I'm trying to probably get on yours, man. So we're all in this thing together, man. That's for sure. It's really cool. All right. I appreciate being on the show. And yeah, anytime, I'd love to come back. It's been a lot of fun. It was great. Great talking with you guys. Enjoyed it a lot.
Yeah, well, we appreciate you. We'll follow up with you here after the crash, right? And so hopefully we'll meet up somewhere on the East Coast and drive our Lambos.
Yeah, right on. I hear that.
All right, guys. We appreciate it, dude. Thanks so much. Have a great day.
Yeah, you too. Peace.
Good talking to you, dude.
You too. Nice meeting you guys.
Thanks again to Bitcoin Dude for joining us on this episode. We appreciate you coming out, and we look forward to catching up with you after we get out of this market red streak. All right, let's get started off with this week in cryptos. Hesto, there are a million different proof ofs. Give me a couple of them and try to break these down for me. I think most people are probably most confident, right, or are most competent on proof of work, proof of stake. But I'm looking at this list right now. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. There are 11 different proofs just that we have a list of right here. And it's important that people know about these because that means different things are happening with your money.
Yeah. Okay. So there's like you said, there's a ton of different consensus algorithms out there. Everybody's familiar with proof of work, and I think that's easiest to understand. Computers doing calculations using its own processing power through CPU or GPU or ASIC miner to verify transactions in hope to win the block and win whatever incentive there is, a Bitcoin or whatever there is. But there's also proof of stake, which in the simplest terms, instead of using computing power to validate transactions, you're using your own stake in the coin to validate the transactions. So a problem that arises with that is people that have more money to invest in the coins have more power to validate transactions and have a greater chance to win that block and get rewarded.
Rich get richer.
Exactly. The rich get richer. That's the issue with proof of stake. But a problem that it solves is the main problem with proof of work, which is environmental implications and energy usage. So there's one thing I've noticed through all these consensus algorithms is there's pros and cons to every single one. Not one has solved every issue and is just perfect across the board. Now,
proof of work, you don't technically, you don't have to own any Bitcoin to do work on the network. You can you can gain Bitcoin without having to have it. Proof of stake, you actually have to purchase to get involved in it before you can actually, gain rewards from it.
Definitely. And I think the more, because there's a lot of new consensus algorithms that we've seen out there, because a lot of people might not know proof of work is an algorithm that's been out there before Bitcoin was even invented. So, that's not a new consensus algorithm. That's just something that works best with Bitcoin. But a lot of these new consensus algorithms that you see, like proof of work.
And for the duds out there, like myself, a consensus algorithm, guys, for those of you out here who are wondering, a consensus algorithm, all that means is that it's a process by which, or a mathematical formula that's solved to come up with a solution, and that solution unlocks a code, right? It's like solving for a puzzle. Once that puzzle is solved, then it unlocks the verification of the block, which lets that transaction sit on the blockchain and be legit.
Perfectly explained, yes. So we've kind of gone over, I guess, proof of work, proof of stake. There's also proof of capacity.
Well, there's different variations of proof of stake. So maybe we should kind of...
Good point.
There's T-bone, there's bone-in ribeye.
So, okay, let's hone in.
I always prefer a good ribeye.
Let's hone in on proof of stake real quick. So there are different variations, as you said. Proof of importance is one consensus algorithm that is a different type of proof of stake. So they kind of try to solve the problem of the rich get richer by implementing an importance level, is what they call it. So NIM is one coin that uses this new proof of importance algorithm. How it works is you're also staking your coins, so it is similar to proof of stake, but you have to raise your importance level to be able to validate more transactions. So you can't just have a bunch of coins, have a huge stake, and be able to validate more transactions, meaning you're able to get more transaction fees or incentive to validate those transactions. So you have to have an importance level, and how you do that is by transacting on the network to raise your importance level. There's also delegated proof of stake, which is more like a voting system. So they also are trying to solve the proof of stake issue of the rich get richer by you can stake your coins, but you can't just have a large amount of coins and that's the only method of validating more transactions. So with delegated proof of stake, the community, the network actually votes on who should have the nodes and be able to validate more transactions. And it's almost like a voting system where, the community comes together and they say, like, okay, this person has a lot
of how well voting systems work.
Yeah, that one scares me.
But a decentralized voting system is a little bit, you're not centralized in any way, so you're actually really listening to the network.
Exactly.
I don't know. A decentralized voting system just seems like it means that you're only going to have one vote, so you're not going to have any voter fraud in the system. But that still doesn't account for the masses are idiots, right? When people it's true. Like when people get together, they go in this pack mentality and they see some stupid. Okay, nobody would ever fall for like a total obvious, ridiculously obvious Ponzi scheme in Bitcoin. And yet it happened, and it happened en masse. Mm-hmm. So I don't know if leaving it up to the masses is the best. Also, hey, can I just take a step back too, real quick on proof of stake? Mm-hmm. Like and why. So we talked about one of the reasons that people were trying to find a better way to verify these blocks than what Bitcoin uses traditionally, which is the proof of work algorithms, is because of the monetary investment right into the GPUs and into the electricity cost to solve these. But another really big thing that I think is worth touching on is the 51% attack. Right. So it's called the tragedy of commons. Right. And essentially what that means is that if someone could muster up the USD, right, to gain 51% of the currency, right, then they'd be able to manipulate the blocks themselves. And it's a massive amount of energy and it's a massive amount of money that you would need, but that money's out there. It literally is out there. Countries have that much money and that much access to electricity, so it's possible. And so to one of the biggest ways to solve that is to create this proof of stake situation, which means that when you're doing the mining, so you're still mining and you still have miners, but in the proof of stake scenario, if you own 3% of the coins, you can only mine up to 3% of the blocks, right? So that keeps you from being able to just be this big dominating powerhouse and mine everything. And so much in the same way, what was the last coin what was the last algorithm we were talking about? Consensus algorithm?
I think delegated proof of stake or proof of importance.
Proof of importance, right? So, so in both of those scenarios, they take off of that same idea where general proof of stake says you only get 3% of the blocks. Delegated proof of stake says, okay, well, you get 3% of the blocks. That's cool. But like you said, Hesto, one of the problems with that is the rich get richer, right? The more percentage you have, then the more you win, and it just keeps growing on top of itself. So each of these are kind of like little whittling downs of a really great idea, and then little tiny little caveats on it just to solve them. So everybody kind of keep that in mind, what we're starting with and kind of what we're working towards while you're listening to these guys explain this stuff.
Yeah, and I think what it shows is that because this whole space is in its infancy, people are just trying different ways to work these blockchains. Proof of work does a lot of things right. It definitely is, I would say, the most secure from someone controlling the full 51%, because it's almost impossible to have 51% of the computing power on the Bitcoin network. It's and one thing I found interesting earlier when I was reading was that the computing power right now, if you rank countries of electricity usage, Bitcoin is they're ranked 60th. They're above Ireland. They use more electricity than Slovenia, and there's a bunch of countries under them. But that's how much electricity power that the Bitcoin network uses is higher than a lot of countries out there. So
Transylvania is also one. That's why he doesn't like proof of stake.
But I think that's where proof of stake came from, is they were like, this is using way too much electricity. And I mean, honestly, proof of work can't be the future. There's just no way. Because it takes too much electricity. There's no way that all these cryptocurrencies can use proof of work. It can't happen long term. It just can't. So That's why proof of stake is taking off and all these different consistent algorithms. And what we're seeing is just everybody is trying to grow with the space and come up with different ways for this stuff to be successful. And some of these algorithms are gonna work long term, and some of them are just gonna not.
Yeah. So what? So like some of these more obscure ones, like what is proof of burn?
You're basically providing proof that you burned some of your coins, destroyed them in theory.
So it causes deflation, I guess.
Yeah, it causes deflation in the coin. I know we've talked about that in the past. You're a big fan of proof of burn coins and your 3-on-3 fast break there, Tater.
Yeah.
Moon coin comes to mind.
Yeah, I picked all those coins before I knew what
coin
proof
of the
of burn was.
Well, holy shit! I wish I would have picked Moon coin for my coin of the week.
Lie.
I think it went up 50% last week.
With proof of burn, basically the coin owners are trying to burn as many coins as they can to win the lottery of the next block of coins.
So that's like Cthulhu. Like last week I did Cthulhu. That's a proof of burn?
I don't really remember much about Cthulhu.
That's what it was. That's the way it was.
Well, you're screwed because Cthulhu's coming, bro.
The end is nigh.
And I don't think he's going to accept the answer. I don't remember too much about Cthulhu.
I have not purchased any Cthulhu, so
you better.
Well, then how are you going to pay your way out of the apocalypse?
I don't know. I got to get on that.
When his tentacle grabs you, you better have some Cthulhu coin. Or I think it was called, what was it, off coin? I don't know.
Yeah, it was off. Yeah, it was offerings, Cthulhu offerings.
Yeah.
So who knows what stake velocity, proof of stake velocity? I'm going to go out on a limb here. Okay, so based on I'm just going to go with a pattern here, and my assumption is that proof of stake velocity is it's whoever has the fastest network or who has the fastest speed on the network gets the higher bump up in the list to solve the equations.
Incorrect.
Well, they need to start that one.
So what is proof of stake velocity?
It rewards the users based on your volume of coin and how frequently you use them. So if you're spending them, if you have a whole bunch and you're spending them all over the place, sending them all over the place, you basically get rewarded quicker, more, and more frequently.
Yeah. Okay. Yeah. See, I like that. There's so many pros and cons with all these different consensus algorithms, and there's so many, like that proof of stake velocity. I don't even know what coins use proof of stake velocity.
Redcoin is the only one that I've seen so far.
See, and there's so many of these little coins that no one's ever heard of that are using these algorithms. More will come along if the consensus algorithm works.
Mm-hmm.
That's cool. We're in with all these altcoins. One of the great things is that we're solving a lot of we were talking about whittling it down, right? So we're whittling this down. We're finding what's going to be the best consensus algorithm net, right?
Exactly.
By working through all these altcoins. That's pretty cool.
Yep. And
what's proof of stake time?
So proof of stake time uses how long you keep your coins. I mean, it's basically what it says it is. So if you hold on to your coins longer, then it calculates the age.
It's a hodler's coin.
It's a hodler's coin with a specific address, and yeah.
So then you'd never ever spend it. Like there would be the longer you held it, the less you would be incentivized to ever use it.
Of proof of burn.
Yeah. So basically, the longer you hold it, the more transactions you can validate, the higher likelihood that you'll get rewarded for validating. Mm-hmm. And one thing that we should point out is the difference in a validator and a miner. So a miner would be what you would call somebody that's doing proof of work, and a validator is what you call somebody that's doing proof of stake.
But essentially, they're doing the same thing, right? They're solving an algorithm to accomplish a verification of a block. Yeah,
they really could be both called validators because they're both validating transactions. That's the whole point.
Yeah, at the risk of promoting centralization, I think it would be good in the space. It's probably not realistic at this point, but just to have like one common lexicon.
I think that's what we're working towards, and that's what the whole space is trying to figure out is what is the best one. I don't know if there'll ever be just one consensus algorithm.
No, there won't. I mean,
yeah. But we're right now. I think everybody's just trying to figure out what's what's going to be the worst?
Be more in the future, to be completely honest. It's only going to get bigger. And I mean, there might be one that comes out that solves more issues than any of the ones that are out there right now. We don't know.
And what you see as well, I mean, everybody knows Ethereum is they're combining consensus algorithms into their own that they just developed called Casper. So there's a mixture of proof of work and proof of stake. Vitalik came out and said that proof of work is not a long-term solution because of the environmental factors. So they're pushing more towards a proof of work and proof of stake consensus algorithm that there's called Casper. So they still have the mining capabilities where you use your computing power, but they also have proof of stake. But Casper is a little different than your traditional proof of stake, meaning you have to have a certain amount of coins. I think right now it's at 1,500 to have your stake. To have any stake at all, you have to have the 1,500 of the Casper Ethereum coins to even have your own node on their main test network. And this is still an alpha stage, this Casper thing. So it's really, really early stages here. But I think they've come out and said we're trying to transition into proof of stake because we think long term that's a more viable solution than proof of work.
That's why Ethereum scares me. It's got too much. There's too much manipulation available.
Very centralized.
You know what I mean?
Yeah, I'm not afraid to say I'm not a big fan of Ethereum. As an investment, I can see it for sure because they're really, really popular. I mean, every ICO that you hear of almost is run on the Ethereum network, and so they're really getting a lot of usage. But I think the centralization factor of them is just I'm not a big fan of it, honestly.
Ethereum does, however, also still, even though not every coin uses a blockchain, right, to solve things, Ethereum does use a blockchain. And some of the basics of the blockchain, specifically in terms of Bitcoin, is the SHA-256. Who wants to take a crack at that one? I saw some guy online, so you can go to YouTube, by the way, and you could see a guy do a SHA-256 on a piece of paper with a pencil.
Oh yeah,
it's pretty badass.
The other day, and I don't know, I doubt he ever did anything, but they were actually mining on paper. They downloaded the blockchain and were actually
this is it. It's got to be the same thing.
Yeah, I bet it probably was the same thing.
It's like it was like a graph paper. Is that graph paper?
It was actually an article that I read. It wasn't the YouTube thing. It might have been somebody writing about the YouTube article.
No, it was mind-blowing. I did definitely fast forward through it because that's how mind-blowing it was. But it was cool to see it actually solved on paper. It was crazy. And it is. That's mining, right? So it's the same.
Yeah. Basically mining with a big cheap tablet.
Yeah, exactly. And your number 2 pencil.
See, that saves energy right there.
Yeah, that's right. If everybody could just write their results down and then submit it to Bitcoin via email.
Send it through the mail.
Okay, so another algorithm that is similar to proof of work would be called proof capacity. Burstcoin is an example of that. Basically what they do is instead of using CPU or GPU power, they use hard drive space to do the calculations. Works very, very similar to proof of work, but instead of using CPU power, processing power, you're using hard drive space to do that. So now it still has its pros and cons, just like every other algorithm. I would say a con for this is just like if you have more computing power, you have more validations, meaning you get rewarded more. This one, you have more hard drive space, you have more computing power, meaning you get rewarded more for the validations. So they all have their pros and cons. None of them are perfect.
All right. Well, that about does it for this week in crypto and our consensus algorithms. Now it's time for the 3-on-3 fast break. Each week, we pick 3 coins from the 300 level market cap and make our pitch for that coin. We're going to give you a little overview of the coin. We're going to talk about the price, the market cap, the supply, a little bit about what it does, and what it will do in the future, potentially. So I'm going to start my time right now. So my coin is called Decentraland. The coin that you buy is actually called Mana. The market cap is 84 million. Circulating supply 1 billion, total supply 2.6 billion mana. Well, this is a pretty cool coin. It's the same general concept as Music Coin and some of these other coins where they try to create a network with which you can spend money in, but instead of being focused on music or being focused on the music industry, this one is specifically focused on a virtual reality world. So it's kind of like, for those of you, I'm going to say a word that's about to blow people's mind, EverQuest, right? It was the very first video game that was the very first video game that when you went like closer to an object, it actually became more detailed. And it was the first of those games like World of Warcraft, just huge mass multiplayer games where you just explored an environment. And this is trying to do very much the same thing. So it's creating a coin and a transaction platform on the Ethereum network within this virtual world, which is, ironically, this is what I thought Bitcoin was the first time I heard about it, probably 3 or 4 years ago. I thought people explained Bitcoin, they said, oh, it's a digital currency. What is that? It's like, when you're on a video game and like World of Warcraft and people are exchanging like their suits of armor and things like that for these digital coins. And so I was just picturing it as like gold in the game. You get gold coins. So this is actually that. They've actually started something called Genesis City, which is the very first group of thousands of investors. It's got artists, developers, community leaders, and it's their largest scale version of this so far. Also, it's a burning coin, so they're burning their mana, and they're selling parcels of land in this space, and so you can actually own real estate in this 3D VR immersible world, and use this currency. I got time left? How much time I got?
You got 30 seconds left.
You have 30 seconds left.
You just beat the clock, son.
Yeah, that's it. You guys got questions?
Wow. Is it a scam or is it going to the moon? Win Lambo.
Yes, no, now.
I'm sold.
Done. I
still got more time.
The mana. I just bought it. I don't know. I mean, it was around like when CryptoKitties came out, and I was like, yeah, this is interesting. Let me grab some of this because it was super cheap.
Well, I mean,
and we are out of time.
Oh, I was just getting ready to say something really relevant.
I'm sure it was very intellectual.
Alrighty, so that takes us to our next coin, which is Electrify Asia. P, tell me what you got.
Well, I'm going to go ahead and say I'm probably not going to take 3 minutes here. This one is pretty simple. So Electrify Asia is basically the first electricity marketplace for blockchain in Southeast Asia. It's pretty similar to a lot of the other, was it Power Ledger, WePower, where they're just trying to decentralize the, electricity marketplace. Except for they've already done some business basically in Southeast Asia. They have done over 30 gigawatts. GAW, I don't know a whole lot about electricity. That might not be that much. But
is that gigawatts, just like Back to the Future? Is it gigawatts or gigawatts?
Those are Google Watts.
They've done both. And $5 million to date since March of 2017. So they actually have a product out there. They're actually doing business. They have a platform, which is a lot more than we can say for a lot of the coins out there in this 300 level space. And obviously there's a huge market in Asia. Just a little bit on the basics of the coin. I believe it is at around 7 cents. Oh crap! And I totally lost my notes on all of the information about the basics of it. I think there's about 200 million coins in circulation.
I just want to know how many you need to run a flux capacitor.
Hey, luckily I got your back, Prater. Looks like the total supply of Electrify Asia is about 750 million coins, and circulating supply is about 250 million coins.
Oh, I was pretty daggum close, even without my notes.
Not too bad off the top of the head.
Not bad.
No,
You
not
got
too
1
bad.
minute to go, brother. You better.
I'm taking questions.
Yeah, I want to know. I want to know.
Power's pretty successful. Power Ledger has been pretty successful thus far. I think they've got the market there.
How is it any different from all the other power coins, including the one I'm about to talk about?
It's probably not, except for the fact that it's already made $5 million.
Yeah, I mean, I would say the fact that they have a working product is already in their favor.
Yeah.
Hell, that puts it above 80% of all altcoins. You got 20. You got 27 seconds left.
I don't even need them.
We're gonna.
This is a win.
On two. This is a win.
This is a
Double
win.
All right, guys. Well, I guess since none of you guys are going to take 3 minutes, I will take 5 minutes to make up for your lack of enthusiasm.
I didn't need 3 minutes.
This is what the viewers want. Decent out there. Everybody's like, can Hessen please have 5 minutes?
I'm gonna. It's probably gonna take 20 minutes to go over all this. Honestly, no. Okay. In all honesty, I don't think it's gonna take. I don't think it's gonna take 20 minutes. Okay. So my coin, 3
Your
on
time
3.
has started.
My 3 on 3 this week is called Energo. It is another energy coin, just like the one we just talked about. Now, what it focuses on is peer-to-peer transacting of energy. So producers of energy and consumers of energy, connecting those two in a decentralized way. Now, one thing it uses, which
How
we're
much
going to
money have they made this year?
$0, a whopping $0, because they don't have a working product yet. So very speculative.
I'm going with Prater's coin.
Yeah, I would probably go with Prater's coin as well. So I wouldn't
This is a hard pitch, guys.
I wouldn't say it's a scam, but I would say it's very, very speculative right now. One thing I do like about them is they use the DAI, and we're going to probably go over that later with our coin focus of the week, which is the decentralized autonomous energy. So they use the Internet of Things, which will kind of come into play with the energy. Now, they focus on a app that tracks energy, so you can make sure that you are peer-to-peer transacting with the energy producer in the most efficient way. So if you see an energy producer that's selling energy at a cheaper rate, you can use their app to get that energy at a cheaper rate instead of, say, go into a contract with your energy provider. You can switch at any time to try to get the cheapest, most efficient energy through their little app. They also have a peer-to-peer EV charging service. That's another thing they're focused on. So charging your electric cars, you can use this to charge it in a cheaper, decentralized manner. Instead of paying your electricity provider, you would be transacting with your electricity using the Energo system. So you'd use your little electronic charger to charge your electric car, and you're paying, instead of a USD, you're paying with an Energo. So I don't know. This honestly, this coin is very speculative. I'd kind of stay away from it from now. That's my personal opinion. But they got some good ideas out there. I wouldn't kind of just go all in with this one yet. It's just too far out right now. They got some good ideas, but I would wait on that one, honestly.
I want to know what did you talk about? A DAI?
The DAI.
Wait. But so that sounds like DAE.
Yeah, it is DAE.
Is it pronounced day or die?
DAI.
Well, you're done because your time's up.
That's what. That's the question that you put me over. Okay.
You're done. Your time is up.
Could have asked me an actual question about it.
Well, I didn't know. I didn't know I didn't know how to pronounce that.
Well, now you know. It's decentralized autonomous energy. IOTA also uses it. And
what a great point.
Yes.
Because IOTA is our coin of the week. So, Hesto, tell me about what is the Internet of Things?
Okay. Internet of Things is the future, guys. So
The future is now.
Yeah, the future is now because we already have the Internet of Things, and a lot of people probably don't even know it. But when you
wait, take a second. Explain the difference between when somebody just says the Internet, what are they talking about, versus the Internet of Things, and how that is two different things.
Okay, so the traditional Internet, when you're talking about the Internet, you would think of a website or something connected to a network that goes to a specific place, like usually a website. That's usually what people are talking about when they're talking about the Internet. The Internet of Things is connecting everyday items to the Internet. So when you look at Nest, your thermostat, that is an Internet of Things device. So that thermostat is connected to Wi-Fi, which you can control remotely. And now it's on the basic level, but eventually that technology will be able to communicate with the energy provider to try to get you like more efficient rates, or connect with other Nest thermostats to see what your neighbors are using as far as electricity, what their average temperature is in their house, all kinds of things.
See, that terrifies me because, for instance, I have a Nest, right? I've had one for probably 3 or 4 years. I had it one when they very first came out. And the shitty thing about the Nest is that you can't override it. There's not. I mean, I've been on all the forums, everything. There's no way to override it. So basically, if it's too cold in your house and you want to heat it up, you turn the thermostat up, and it tells you like, oh yeah, we'll get to it in like 2 hours. It literally says like, in 2 hours we'll go up 4 degrees, but it won't let you break that. Like you cannot. There's no manual mode to just use it like a normal thermostat. So as this Internet of Things grows and as things are more interconnected, is that a centralization of things versus a decentralization of things, or would one or could one power be in charge of all these different things? Like you talk about like comparing it to your neighbor's thermostat. Well, what if your neighbor's like not using a whole lot of electricity, and they say, well, you're a single family home and you got this many kids and you have this expenditures. Would we be able to compare you two, and if they're using less electricity, charge them less and charge you more?
I mean, yeah, all those things are possible. I mean, I think the point is the Internet of Things is connecting everyday items to the internet. And we see that a lot with Google Home and Alexa and those kind of things, where you can talk to it and it will connect. You can say, if you have, an actual like internet connected house, you can say, Alexa, turn off the lights, and it will turn off the lights if you have that Wi-Fi capable light switch, or unlock the door. Or I know a big thing right now is the doorbells with the cameras, where you can go on your smartphone and you can see who's ringing your doorbell.
Ring.
That's an Internet of Things. Yeah, that's an Internet of Things device right there. So we already see this now. One good example of the Internet of Things that I like is cars. So, in the recent years, you see a lot more computing power in cars. And if we look into the future of what the Internet of Things could bring, say your car is low on oil, that computer in the car could communicate with the closest mechanic to find you the best rate for an oil change as compared to the closest oil change to you. If you have any other issue with the car, it will do a diagnostics, find out what is the best mechanic and what repairs need to be made. It can also communicate with other cars around you to see, how successful those repairs can be. I mean, I think the big thing with the Internet of Things is like everything's connected.
See, that's super scary. Because think about it, what if you like to drive, or what if, no, it's not like a choice thing, but what if you're driving around in a hoopty because you can't afford to get all this shit fixed, and oh, okay, I got to get this fixed before my next inspection sticker. But as the Internet of Things becomes more and more real time, then once your catalytic converter goes out, I don't know what that is, but once something that flags one of these regulations goes out on your vehicle, they could shut your car down. They're like, no, you're not going to work today, player, because you don't have a
not if you're a hoopty. I mean, it's
I'm hooping it.
Your hoopty's not going to be connected to the Internet of Things.
Not
more
yet.
Than likely.
Not yet, but 30 years from now,
your Tesla
the hoopty will be connected to Internet of Things.
Right, yeah. Well. Today's Tesla is tomorrow's hoopty. Mm-hmm. And who hasn't been there before?
So I think we should probably go into the coin of the Internet of Things, IOTA. So what is IOTA? And I mean, how is it any different than every other coin in the space?
Well, it's got its own little blockchain, or technically not even blockchain.
Not even, yeah.
There you go. Yeah, I think they are one of the only coins that doesn't have a blockchain. They use what's called the Tangle network. I don't know if any of you guys know about the Tangle network. I don't know if any of the listeners out there
know about the movie Tangle.
It was a great one. That's a great movie. And it's the Tangle network is identical to the movie Tangle.
That's what I thought.
All about a princess, out.
It's Rapunzel, right?
Yeah. It's all about freedom and escaping the
shackles of tyranny.
Yeah. Shackles of tyranny.
So no, that's definitely not what it's about. But so instead of using the blockchain, as in you have a block that contains a certain amount of data, and then it's changed to the next block, and so on and so on and so on. What IOTA does is they have a Tangle network, which is not a chain of blocks, but more of a spider web of blocks that is interconnected instead of as in a straight line. They're interconnected between themselves
like a spider web.
Like a spider web. I don't know. Yeah, I don't know how else to explain it. So some things I do like about IOTA is with
no transaction fees.
Yeah, exactly. With the Tangle network, they guarantee no transaction fees. How they do that? Now they are a proof of stake coin as well. How they do that is each transaction that is made on the Tangle network. So every transaction between IOTA has to validate two transactions. So to transact at all, you have to validate two transactions. So it takes care of the computing power right there. You don't have to mine it. You just have to verify transactions to transact. And I think what IOTA is planning to do is, say your car needs to have a repair, or say your car needs to communicate with the Internet of Things, another car, or something like that. They'll
toll tag.
Yeah, there you go. They'll use IOTA to do that instead of US dollars or Bitcoin or Ethereum or whatever. They'll use IOTA to do that. So all these smart devices communicating with each other would use IOTA to transact with each other. And the Tangle network is perfect for that because it speeds everything up. So instead of having to go in a straight line of blocks to block to block to block to block, it can spread across the entire network quickly because of you have to verify two transactions to transact. It takes care of the transaction fees right there, and zero transaction fees is just amazing.
Yeah, especially for companies that are going to use like micro payments and micro transactions. I know that's a big use case for IOTA, especially with zero transaction fees.
That's where I see it being successful. Yeah. And a little bit about IOTA's name that I found interesting is not only is it the Internet of Things, IOTA, the abbreviation, but IOTA is also the smallest amount of something. That's like the definition of an IOTA. It's like the smallest amount of whatever. So because they have no transaction fees, it was kind of a play on words, a double meaning of the word IOTA. But also what I found interesting about IOTA is an IOTA is the smallest amount of an IOTA. So a myota is what you would trade on the exchange, which is 1,000 IOTAs. There's a GIOTA, which is 1,000 myotas. there's also a TIOTA, which is 1,000 myotas. So they took the gigabyte, megabyte, kilobyte.
There's also a Ray Liotta.
How many iotas is that?
The largest. He's the largest size of iotas you can have is Ray Liotta. I'm a personal fan of IOTA because I think that the Internet of Things is unstoppable. It's going to be a huge deal back in the in the future.
Just think about how many applications use microtransactions now. I mean, I realize Facebook and Google and all these people are removing ads and whatnot from the crypto space, but just think how many people play Clash of Clans or Candy Crush with all these microtransactions. If they can get into that space, I mean, there's no telling what what kind of revenue and what kind of use they can pick up there, because there's just people are spending so much money on these little bitty ridiculous games.
All right, and speaking of games, the game to follow on Decentralized Talk is the Coin of the Week. So let's take a look at our breakout Coin of the Week pick for Week 9. I picked ADA, Hesto picked Monero, and Prater picked XRP. ADA was at 22 cents, sitting now at 16 for a loss of 27%. Monero was 284.97. It is currently at 202 for a loss of 27%, essentially. And XRP was bought at 82 cents. It is currently 0.65 for a loss of 18%. So Prater is the de facto winner. Three-peat de facto winner with a losing of 18%. Although I've lost almost. So last week I lost 27.69. This week I lost 27.27. So that's an upward move. Just to be clear.
I mean, I would say when the whole market is losing about 10 billion like a week, it's going to be hard to come on ahead.
Yep. That's what you got to mitigate your losses.
Buy on the dips. That's what. So this, but I think this is a really great example for people out there. So there's a lot of different marketing, or there's a lot of different investing strategies. The strategy of buy something new every Sunday and then sell it every Sunday and replace it with something else. It's not a winner, no matter how. I mean, between the three of us picking different coins and moving around the market, it's not a profitable strategy.
Well, not in a bear market like we're in. Now, if you're in a bull market, then everything is going up, and that's a good strategy because whatever you pick is going to be higher than what you picked it at.
I'm sure some people would make some money doing it, though. I mean,
oh yeah. If we were,
there's people that specialize in trading bear markets that'll know what to look for. Obviously, we don't specialize in trading bear markets.
Yeah, that's obvious.
But you know what? Essentially, we've done is we're buying the Dow, right? We're buying the Dow of crypto. But I mean, if you look at the average of all the things that we've bought over the course of between all three of us over the course of the last 9 weeks, we're buying the market, and essentially the market is down.
Yeah. And
that's what we're seeing the ramifications of. But the good news is from like our HODL chart. So let's take a look at the weekly chart. So out of $900 invested, I got $805. Heston is at $833 in first place, and Prater, I'm going to go ahead and give you credit for $800.
I'm getting there.
It's $7.99.47 out of a $900. You don't like to see the sevens when you invest in $9, but it's there now. Okay, the HODL chart. The HODL chart is if each of our picks, right, we just kept them and never sold them on that consecutive Sunday. What would our totals be? So right now, I'm looking out of a $900 investment. I'm at $478. Heston is in second place with the HODL chart, overall best investment with $537, and Prater is rounding out the top out of a $900 investment with $581. That means our winner is about negative 35%, which is so I got negative 46%. Hesto sitting about negative 40%, and Prater's at about negative 35% overall on total holding of each of these stocks purchased at their original price 1 through 9 weeks ago.
Did you say stocks?
Okay, touche. Touche. Alrighty, so let's take a look at week 10. And let's see what our coins of the week are. I picked ADA again. So Heston pointed out I have a habit of picking the last coin that I picked last week. It just kind of in hopes that like there's no way it could do as shitty as it did the week before. And yet so far I've been burned every time. But the good news is I'm picking it up cheap, baby. So I'm picking up ADA this week at 16 cents. I actually bought ADA at 14 cents yesterday. What was it, in real life?
Yeah.
In real life. Love it. Hesto, what'd you pick? IFL.
I went with EOS this week. I'm a big fan of EOS overall, but obviously in this bear market we saw every single coin almost drop 16-17% this week, and then they all started coming back right about Sunday, and I'm seeing a trend here every week. It seems to do this, but EOS did not come back as much as some other coins, so I'm hoping they make up the ground early in the week this week, and by Friday, Saturday, when everything's dropping, I'm hoping that it doesn't drop as much because it's still making up ground. That's my theory.
I'm playing
Prater with the safe play.
Yep, I'm going with Bitcoin, the big dog. If it drops, it's not going to drop as much as everything else, more than likely. And if it goes up, it'll probably lead the charge. I mean, you've always got those few outliers that are going to, blast off, but for the most case, it leads the pack. So I'm going to play it safe this week and hopefully pull out a 4-peat.
And one thing I've noticed about this coin of the week challenge that we do here is that we can pick any coin we want. Any coin. Out of the 1,600 coins, we can pick any coin. Other than 1 or 2 coins, we have really strategically gone with about the top 10 coins, you know? Yeah. And I think that's because they tend to be the most stable. But, I mean, really, we should, if you're really trying to make up ground with this challenge here, you should get one of those shit coins.
Moon coin.
But the problem with that is it's just a lottery pick. I mean, you're just hoping that
then you get stuck with Revain.
Yeah.
And it just brings down your whole
HODL. Yeah.
Destroys you. Oh, it's actually kind of back up. It's not killing me.
Well, that does it for our coin of the week. And that does it for this episode of The D. So I want you guys to tune in next week where we're going to break down the basics of technical analysis, make it simple for you guys, not actually cover any specific technical analysis, but break down the terminology and what the little lines and wavy indicators mean. So check us out and be sure to send comments at DTalk Podcast on Twitter and Facebook. And check us out on Decentralized Talk at iTunes and iHeartRadio. We got links to the website in the description below.
Thanks for tuning in, guys. We'll see you next week. And as always, stay decent.